Being a successful trader is not just about having a profitable strategy to follow, but also not repeating the same basic avoidable mistakes. In this video, we'll be discussing common mistakes that new traders often make and how to avoid them. I'm quite sure that many of you have made at least 2 of these mistakes. I certainly have. Hi, my name is Petko Alexandrov and I want to discuss 4 common mistakes I have seen and continue to see repeatedly from many of our students on Udemy as well as from our subscribers on YouTube. If you learn to avoid these, your chances of being a profitable trader increase drastically. Because the unfortunate truth is that the vast majority of new traders lose money. An interesting study on day trading concluded that on any given day, 97% of day traders lose money net of trading fees. This data suggests that new investors decide to begin day trading only because they are overconfident in their ability to be profitable at it. And the first most important mistake is trading real money from the start. Irrespective of how good you believe a strategy may be, whether it's being given to you by a pro trader or you've bought it somewhere, always test your strategy on a risk-free demo account from your chosen broker. And this way you significantly decrease your risk because first, when you trade with real capital, there is always a real chance that you could lose some or all of your money. Markets can be volatile and even the most experienced traders can make mistakes or face unexpected losses. It's best to practice on a demo account because as a beginner, there is a high probability that you will suffer losses. By practicing on a demo account, you can test and implement the strategy as is your trading on a live account, but without the risk, and once you see the results, you can make an informed decision as to whether you should trade it in a live account. 2. Emotional biases. Trading with real capital can be stressful and it can be challenging to remain objective and disciplined in the face of market fluctuations. Emotional biases like fear, greed, and overconfidence can lead to a poor decision making and ultimately financial losses, which again is why it's best to practice on a demo account to learn to trust the process and make informed decisions in a stress-free environment. And 3. Trading with real capital immediately simply doesn't give the time you need to truly understand the markets or the strategy before you risk some or all of your capital. I've been trading for over 10 years now and I always test every single new strategy on a demo account prior to trading it on a live account. There's an old builder saying, measure twice, cut once. This applies to trading too. Practice and practice before committing real money into the market. The second common mistake is starting to trade without prior education. So many people develop an interest in trading but go into it completely blind without taking the time to educate themselves. It is vital to get educated in trading before you begin trading for several reasons. Understanding the market. Forex trading is complex market and getting educated about it will help you understand how the market works, its trends, and the factors that influence it. Risk management. Forex trading involves a lot of risks and it is important to understand how to manage those risks to minimize your losses. Education will help you learn about risk management strategies and techniques. Technical analysis. If you are planning on trading using manual techniques, it requires a deep understanding of technical analysis, including charts reading, candlestick patterns, and technical indicators. Getting educated about those tools will help you make informed trading decisions. And next is avoiding scams. Forex trading is a highly unregulated market and there are many scams and fraudulent brokers out there. Education can help you spot the warning signs and avoid these scams. More on this later in the video. Next, developing a trading plan. Education will help you develop a trading plan that fits your trading style and goals and helps you stay disciplined disciplined and focused on your trading strategy. No excuses. There is really no reason today to avoid getting educated before you start trading. There are literally thousands upon thousands of free resources available online, from YouTube videos to blogs, articles, and professional opinion pieces. In summary, getting educated in trading can help you make better trading decisions, minimize your risks, and avoid scams, leading to more profitable trading experiences. Mistake number 3, trading unproven strategies. And I will start with social trading. As we discussed in the previous section, it's very important to get educated before you begin your trading journey. However, it's essential to ensure that you are being educated from the correct sources. There are so many called experts making videos for social media promising unrealistic profits using untested and unproven strategies, which is unlikely to work in all on any market conditions. Images and videos of expensive cars, houses, and holidays entice the viewer to buy an unproven strategy only to find out later that it was all in fact a lie. Second, trading unproven strategies is risky because, contrary to what the seller is presenting, they have not been testing in real market conditions and there is no track record to rely on. These strategies may appear to work well on paper, but they may not perform as expected in the real market environment, resulting in significant losses. Additionally, unproven strategies may lack the necessary risk management systems, which can increase the likelihood of unexpected large-scale losses. Overall, the lack of historical data and the absence of a proven track record make unproven strategies a high-risk approach to trading. Remember, all influencers on Twitter, Instagram, or any other social media platform are in it for the number of followers they gain and likes they can get on their posts. They are content creators, not traders. And mistake number 4, blindly trusting others. Trading can be risky and selecting a regulated broker is absolutely vital. Trading with an unregulated broker puts you at risk of falling victim to scams and frauds, and unfortunately there are many scammers and fraudulent brokers out there looking for victims. It's important to be cautious and do your due diligence before investing in any trading opportunity. Scam forex brokers typically operate by tricking unsuspecting traders into depositing money with them with the promise of high returns or other enticing offers. They may use false advertising and misleading claims to attract clients and often use aggressive sales tactics to pressure them into making large deposits. Once the trader has deposited funds, the scam broker may simply refuse to allow the trader to withdraw their funds. In some cases, they may also charge high fees or commissions for traders or offer poor trading conditions that make it difficult for traders to succeed. Another tactic employed by scammers is to gain your trust with promises of trading on your behalf, only to initially give you great returns, and once you invest more with them, they either allegedly lose your money or simply disappear. Unfortunately, some people have fallen victim to scammers on more than one occasion, but continue to trust blindly with little to no research beforehand. Overall, scam forex brokers are highly deceptive and often use a variety of tactics to take advantage of their clients. It is important for traders to do their due diligence and carefully research any broker they are considering working with in order to avoid falling victim to these scams. At the Trading Academy, we have and continue to research and work with legitimate brokers. We'll leave a link in the description below to our brokers page where you will find a list of trusted brokers as well as our honest reviews on each. In summary, it is incredibly important for new traders to select a regulated, trustworthy broker, continuously educate themselves, test strategies prior to implementing them in real trading, and practice on a risk-free demo account with your chosen broker for as long as you need before committing any real money into the high competitive and volatile Forex market. If you do this, your chances of success are exponentially higher. I'll suggest you to check out this video, which will teach you how to use my 5 best trading robots that are proven, I trade daily with, and don't require you to have any prior trading experience. As always, I wish you a wonderful day. Don't forget that I love you, and I'll see you right at this video.